Yeah, it's awesome. I'm on a call that's starting right now. Hey, have a good afternoon.
All right, good afternoon. Good afternoon, everybody. We'll give a minute or two for people to get on, and then we get started. Hi, Michael.
Hey, how
How
you
are you,
doing, Andrew?
sir?
Can you hear me?
Yes, yes,
Okay, yeah.
I can hear you.
Doing well. How you doing?
Awesome. Ready for holidays? Christmas coming
Yeah,
up?
I'm not ready yet, but
Yep, a lot of work.
did they get out all the flyers and everything? Are they available now?
That's what we're gonna address today with Stefan and Stan. Um, we just got off from ER3, call. So there he is, ST1.
It's me.
Yeah,
It's
last
yeah,
night,
but you have
yeah.
it backwards. It's TS1.
Oh,
Tree shaker, not ST.
no, I was thinking about Stan.
That's okay.
Okay.
TS, yes, yeah.
Okay,
There
so
you go. Well, hey, listen, wonderful job. I want to welcome. Look, you've already got 32 participants on this call. Okay, that's pretty crazy, huh? And it's going to be growing. Pretty soon, you're going to see 132 on this call because this thing is it's wildfire. It's viral. So, Andrew, thank you for hosting it. My business partner, wonderful job. Um, we're just waiting for Stephan to get up. Oh, there he is.
I've
Stephan
been
has
here.
made
I've
it.
been here.
He's here.
all
Okay.
right.
It's got his official pickleball hat on,
Uh,
Yep.
which is really, really good. So I just want to welcome everybody. We got some new people on here. So we're going to go over kind of some of the basics of the program. And then we're going to be discussing some of the changes that we made to the site and some other stuff. Hey, Uncle Dan, welcome everybody. I don't have enough time to welcome everybody. My goodness. But anyhow, Stefan, let's get started. If you could just kind of pull up our site and basically just give an overview of what is we're doing and why there's an opportunity. Let's start out with that one.
let me see. Can I share? Am I sharing?
I
Yes.
think you can. I think you can share. Go
Oh,
ahead.
there we go. Okay, I got it. All right. Can you see my screen?
Yes.
All right. So this is a landing page. The only thing we have left to do is we're in the process of building an explainer video that we're going to add in here. And then we're going to put some links in the top here to make it easier to navigate. And then we're done with it. So once we have that, then we'll be able to put it out for other replicated sites. But the important thing to know about this is, I mean, it's as the Federal Reserve has put out an announcement, they believe that there's $11 billion that go unclaimed in annual credits. So this is a big part of that. So we've revised our estimate. So if we look at it on average, the average is about $51,000 in refunds. But if you look at the median average, there's a lot of smaller, like one restaurant businesses that are bringing the average down. But if you look at the median, it's about 101,000. If you take into consideration, you throw out the smaller ones and you throw out the big ones, the median's about 101,000. So it was for the hospitality and restaurant industry, but this year we added in the beauty and personal care. So beauty and personal care is eligible as of 12/31/2024, meaning for the 25 tax season, they're eligible, meaning any FICA tips on taxes on employees' tips that they had during 25, they're eligible to get it back. So what most people will ask me is, how does this happen? Why is, when somebody tells me that their CPA is taking care of this, why is that probably not true? Or my payroll service does this. Why is that not true? Well, first of all, on payroll services, they don't do this. And the reason they don't do this is they view this as a liability to them. They do not want to determine how much in FICA taxes they should not withhold. They view it as much lower liability. They just withhold and make it the responsibility of the business owner to go get that credit. And that is exactly what's happening. And from a tax preparer standpoint, the reason why it doesn't get taken care of on that side is most tax preparers don't have the time to seek this out. This is a fairly long and involved process to determine how much of it is FICA tips tax credit. It's involved to figure that out. So tax preparers don't have the time. Sure, if someone gave them the information and told them the form exactly what numbers are on the form, could they put it on a tax return? Sure, they could do that. But they're not going to go and seek out the information and try to determine how much FICA tax credit was missed. They don't have the time. So that's the real reason why 80 to 90% of small businesses do not take advantage of this. Most of them don't even know it exists. So if you approach them and they say to you, FICA tips, I've never heard of that. Don't be too surprised. It's not uncommon. So what we're going after is the business owner's money. The credit is taken care of on the business owner's personal return. If there's more than one business owner, then it would be divided among the business owner's percentage of ownership, or however the K1 is divided up. I mean, if it's a LLC, it can be allocated differently than the ownership percentage. But so whatever they have as their percentage, whatever's going out as far as income, that's what's going out to them as credit. And that can be actually allocated differently. So it's to the business owner's benefit to go after this. And 80 to 90% of them don't. So it's estimated that tipping accounts for $38 billion in annual revenue based on the IRS's
And all of
projection.
a sudden, you came and everyone they walked out, and
Somebody needs to mute, please.
Andrew, can you mute that person, please? Excellent. Okay, so what
So
I
one
want to
of the-
do here a minute is, so Stephan is doing a wonderful job going through here. So
All
let's
right, so
just
one of the biggest tools we have for you as far as marketing is this landing page. So this landing page gives the business owner the ability to calculate their own credit. Now, this is on an annual basis. So I'm going to throw some numbers in here. So let's say we have 60 employees, and it makes a difference. See this here, it defaults to $2.13. The minimum wage rate for most states, and there are 6 states that don't follow the minimum wage rate, and the calculation's a little different, but $5.15 is the max. So once we get past $5.15, it doesn't make any difference how much the employee's making. That's the minimum wage rate that was set for this for this section of the IRS code back in 2007. So all we have to do is meet the $5.15 an hour for most states, and we get the full credit. So you can see in this client, they have 60 employees. All the employees are making $5.15 an hour. They're making $250 a week. And if they make more than that, there's going to be more credit. And they're making $40 an hour. And this is kind of irrelevant unless this number is less than $5.15. Then we need the number of hours a week. So this is a client that's getting back $59,670 in 1 year. And that's 60 employees. So you've got, clients that have in multiple locations may have a couple hundred employees. It has to be tipped employees, can't be independent contractors, tipped employees in specific industries. In the restaurant and hotel industry, in the hospitality industry, and the new one is in the beauty and personal care industry. So to understand what those industries are, we've got a section down here that breaks it down. So this is the hospitality and restaurant industry. So kind of a listing of the typical kind of clients that fall into that industry, which is the full service restaurants, the bars and nightclubs, hotels and resorts, catering companies, coffee shops and cafes, and then other qualifying, which you may not think of, like cruise ships and casino restaurants and food delivery services, valet services. They're all still in the hospitality industry, and they get tips. So then the newest industry, like I said, that started is effective as of 12/31/2014. So it starts on January 1st, 2025. So all of this year, these type of this industry, the beauty and personal care, also qualifies. So we can't go back. For the other industries, we can go back 3 years. For this industry, they only started this year, so we can't go back any other year. We can only do this year. Next year,
Okay.
1 year back.
Can you go back to the calculator a minute,
Uh-huh.
please?
Yep.
Yep. Let's go back up. So this example where we're showing the 60 employees.
Yep.
So let me get this straight. You're telling me that we have the potential to take that number and multiply it by 4. Is that right?
In the hospitality industry, yes, because this would be 1 year. If they're consistent from year to year to year, then and they had 60 employees all throughout those 4 years, yes, we can go current year plus 3 years back.
Wow, that's a lot of dough.
And it is a non-refundable credit, which means they need to have a liability on their personal return. But even if they don't have a liability, doesn't mean it's gone. So we can carry this credit forward for 20 years. So let's say we have a good liability in 22, but not so much in 23. It would pass through 23 into 24. Of course, 23 and 24 also have credits coming in. So it'll be one pass forward in 24 and another one coming into that year. And then if they can't, let's say they can't use it all in 24, they would carry it forward to 25. So it's like a planning tool. You know, if I told you had $200,000 of additional credit coming into a year, you could really pump up your year knowing you've got a credit of $200,000. And that's liability credit.
So
I say
they
liability.
are gonna see the value. So we do have a question, another question here.
Yep.
Do gentlemen's clubs count?
It's in the hospitality industry, yes.
Absolutely. Absolutely. It sure does. Yep. Yeah, yes, it is. And I'm not sure how they're reporting their stuff, but it's been a while since I've been to one of those places. A little while. So anyhow, we have Tanya has a question. My chat thing just kind of jumped off of the screen, but hang on 1 second. Let me just open it up. Okay. So Tanya, if you want to just pop in what your question is again, or you can unmute and ask it. We're going to just kind of open this thing up. We're going to go over some things. Feel free, everybody, just to raise your hand. Okay, this is interactive with Stephan. You know, our group is growing. We have 40 people on this call today, and it's just growing like wildfire. So let's ask Stephan a question. If you have anything while we're kind of going through it. Okay, here we go. I can see them now. So I'm going left to right. So Larry, welcome to the call. Why don't you unmute and ask Stephan anything you got on your mind.
Hey, Stefan.
Hello.
Yeah, thanks. What about these fitness clubs? I noticed it was on. What kind of tips do they get, or am I off base on this?
I mean, it's not prevalent in that industry as it is in other industries to receive tips, but they do. You know, like fitness trainers, some of those they're employees of the club and they get a tip.
All right. Well, thank you. That's all.
It's not as prevalent like in, restaurant industry or the gentlemen's clubs for sure.
Right.
I mean, that's pretty expected there.
Excellent. I didn't know they took
massage parlors,
sure
massage, that's they're employees and tipping is part of the industry. It's kind of expected.
Yep. Okay, let's go over to Joe. Go ahead, Joe. Unmute and ask.
Hi, Stefan.
Hello.
I'm not, you were talking about liability. I don't quite understand this. I thought this was like ERTC.
Okay, so here's a little background on FICA tips tax credit. So employers are not supposed to pay FICA tips tax credits on their employees' tips. They're not supposed to pay it. But for a payroll company to try to figure out how much they should not pay, they consider that a liability. When I first started, I'm like, why are payroll companies not reducing the taxes on the 941s? Why are they not doing that and getting the benefit for their business owners along that they? So when I started talking to some of the executives in payroll companies, they're like, yeah, we understand it's a problem. We understand it's a benefit to the owner, but we don't want to accept a liability to reduce the payroll taxes. That puts the burden on us, and it puts the calculation on us. It's much easier for us to calculate the FICA taxes on all the income, including the tips, and make sure that the business owner understands it's their responsibility to go after that money. We are not going to do it for them. So that's what I mean by liability. They consider it a liability to calculate how much the business owner should not be paying as a business for FICA tips.
Okay, I think I misunderstood because,
Yeah.
okay, so as long as they have a liability, which means they did pay the taxes on the
Yeah,
FICA tip,
that's
they're
a
going to
different.
get it back.
Okay, so that's a different question.
All right.
So when I say liability, so let's say on my tax return, I have taxable income, and my tax liability in that year is $20,000, right? So I have a liability. That's money I can go after. But let's say I have a year where it's a really lousy year, and I paid practically no taxes. In that year, I really don't have anything to go after because it's a non-refundable credit. I have to go after taxes that were paid as in estimated payments or payments that I wrote a check with my tax return. That's what I can go after. So for a non-refundable credit, I can't get a credit for something that didn't get paid. A refundable credit means that even though I paid no taxes and I have a $20,000 credit, I can still get a $20,000 credit even though my client had no taxes.
I got it. So also, you're saying we can do year 2025 and 3 years before that, so 2024, 2023, and 2022?
Correct. And all those are electronically fileable returns right now. So we're going to lose one more as soon as the IRS goes down, we're going to lose one. Doesn't mean we can't get it. We just have to paper file. It doesn't mean the statute's now up on that one. We just can't so it's ideal to electronically file the return because as we electronically file, we can bifurcate the refund. We can't do that with a paper return.
So if they haven't filed, they should do it electronically, but if they did file, however they did it, it won't matter if they did it by paper or electronically, because you're going back to
So
where they
the
already filed.
rule is if they electronically file the original return, we can amend the return electronically as well. If they filed the original return on paper, we cannot amend electronically.
Okay, so how long is it taking them, by the way, the IRS to go through this
If it
stuff?
if it goes paper, 16 to 20 weeks.
And
If it
electronically?
goes paper. If it goes electronically, it's more in the range of 4 to 6 weeks. Again, can't guarantee that because we electronically file a return. It gets in the system in a couple of days. We get a response that the return was accepted. Now it goes out to a human being to process that amended return. That's the part we can't control. But
What
it
was
is
the length
fast.
of time you said for paper?
Paper's typically 16 to 20 weeks, typically.
All right, great. Thanks. Appreciate that.
All right. So Michael Greer, unmute my friend and ask your
Great
question.
presentation. Yeah, my question is, so if we do the 2025 in the previous 4 years, or the 2025 in previous 3 years,
Yep.
is there an opportunity next year to come revisit this again? And would that be a commissionable sale?
It's tough to make it a commissionable sale, and I'm trying to figure out a way to do this, maybe as a service. Because in order to get it to be commissionable, you kind of have to let them make the same mistake all over again, and then come back to them and say, "Did you miss the FICA tips?" Yeah, I think I did. Okay, well, we can go get it for you, but it's going to cost you 30% to go get it. I just, in good conscience, it's going to be a tough sell. I mean, you really have to let them make the same mistake all over again. If they made it, okay, fine, go after it. But
So what you're saying is once we open their eyes, they'll get their tax advisor.
I would hope so, especially when we
Okay.
got them, 4 years worth. You'd think they figure it out and figure out a better way to do this so that
Okay.
now it's on now it's on their radar. Hey, I need to go after this credit every year. So
Yeah.
somebody's going to have to figure this out. Now, here's what typically happens. it shakes their confidence. It shakes the confidence of them and their preparer. Like, hey,
Yep.
my payroll service didn't help me out, didn't even give me the information. My preparer completely missed it. They knew what I do for a living. So I've completely lost faith in these people. Can we take that over and prepare that return and do some kind of a revenue share with that? Yeah, that we could do, but it's not going to be huge. It's not like it's going to be a percentage of the refund.
Okay. Great.
But, yeah, we shouldn't let them keep making the same mistake and hit them up for, let them go 3 years down the road and hit them up again for, another 30%.
Okay. Thank you.
So we have a wonderful opportunity to go in with the FICA tips opportunity. Then we have the opportunity, Michael, to basically take them over as a client.
Yep.
But the exciting thing is once we're in with one, remember now, we just got off our webinar for ER2 and ER3, okay? Helping them either with their retirement account, helping to fund their business. You'll probably be on the team with the resiliency systems. We're saving them money on their water bill, their electric. Once you're in, you're in.
Yeah, and then there's more programs that we'll be putting out after one. They'll start dropping one by one. So we've got the utility sales tax credit, we've got cost seg, we've got other programs that are going to come out, R&D and other programs that'll come out that these clients probably could take advantage of as well as tax recovery. So tax recovery, this really is tax recovery. So it's finding something that they miss and getting paid to go recover it for them. If they missed FICA tax, is there anything else they missed? Quite possibly, especially when you're talking about a restaurant industry. A lot of people don't understand the restaurant industry. They don't understand it's a different type of industry. The depreciable assets are different. There's things you can expense that a lot of people don't understand you can, and they take depreciation for it instead. So there's opportunities that we could seek out while we have them as a potential client and ask them more questions and see if there's other things they missed.
Yep, especially with the big, beautiful bill, right? Isn't there going to be more things that they can expense, equipment and so forth?
Yep.
Awesome.
Yeah,
Great to hear.
So bonus depreciation, and some of that bonus depreciation you can amend for back years.
Wow. Okay.
That's
So
exciting.
If they should have taken bonus and they didn't, in some cases, we can go back after that and do a change in accounting method.
Yeah.
Hello, it's Rashawn Landry. I have a question.
Go right ahead.
Is that Larry?
Sorry, Landry. We can build teams on this. I heard. And what do you think of health spa and medical spas? The people who get tipped there.
Again, so the requirements are the industry qualifies. It's just a question of, are they an employee and do they receive tips and they're reporting their tips?
Right. Okay.
So if they meet all those qualifications, then they qualify.
Yeah, they get day spas, med spas, health clinics.
Yep.
You know what I mean? People go there. They get pampered. And we can build team on this, correct?
Absolutely.
Yep. And who invited you to the call?
Brian Causey.
Ah, Brian. He's one of our big team leaders. Yes.
He's definitely an active guy.
He's
We
very,
like
very
Brian.
nice gentleman.
I
Brian's
talk to
good.
Brian. I talk to Brian pretty much every day. I update him. He's done a great job at building the team. So yes, you can. So I'm going to say my little speech here in a minute. Uncle Dan, you're going to be next.
No, Larry's before me.
Okay. Well, very good. We'll get Larry in a minute. So what I tell people, and I want you guys to count how many times I say this, okay? We love this program because everybody knows somebody, one, knows somebody who knows somebody, two, knows somebody who knows somebody who knows somebody, and knows somebody who knows somebody who knows somebody. So basically, what we're doing is we have the originating consultant, let's say, that goes in, gets the deal with the restaurant. Then we have the person that brought them in, the person that brought them in, and the person that brought them in overrides. I don't think I explained it right, but you get the idea. Everybody's making money. There's tons to go around. And what Stephan's doing right now is he's showing you some of the marketing materials that he's been working on with his overseas team. The guy's up all night doing everything. So Stephan, why don't you show us what you got, and then we'll take a look at the comp grid in a little bit, okay? Go
Yeah,
ahead.
so we designed this for people. If you're going to a restaurant, we designed this to hand it to the head waiter, head waitress, the maitre d'. It was designed to encourage that person to give it to the owner. That's what it was designed to do. And the only thing we're going to change on this is we're going to change this average to median for 101,000. That's the only thing we're going to change. And what we've done is we set it up so that you're not the one responsible for the communication. So any emails that would come, they would come to us. Any phone calls that would come, they would come to us. This Scantron right here will be to the replicated site. So you can hand this to somebody, so they can scan it in. This URL link here will be to your so this will be customized to you specifically. So it'll be your rep landing page. This will be to your rep landing page.
Wow, that's really cool.
Yeah,
you mean I don't have to answer questions?
That's the idea. I mean, originally I
That's
thought
so
about
cool.
let's have the contact information for the rep and them. No, we're not asking you to explain this. We're not asking you to field questions.
I like that. Okay, I believe Uncle Dan, are you next? Who's next?
Larry.
Okay, Larry, do you have a question? You can unmute and ask.
Yeah, thanks, guys. I'm getting a reverberation. Nope,
Yep.
that's better. Thank you. Now, on the calculator that you guys did, you said the maximum hourly wage is $5.15.
$5.50. That's the minimum wage that was set in 2007 for most states.
Okay, because I'm in California.
Yep, California is different.
$16.50 is the minimum wage for servers.
Yep. So that means that
they're losing out on that extra $10.
No, not 10, 16. Yeah. So the math is a little different. It's still beneficial to go after, especially if we've got a ton of employees, but the math is different. So there's 6 states that don't follow the minimum wage rates. And so we have to do the math a little different. It's still beneficial. It's just not as beneficial as it would be in those other states.
So you're saying it's going to be $5.15?
No, what I'm saying is in state of California, the math is different. So the benefit to the owner would be less.
You can't use this exact calculator. Stephan's going to program one for California.
Yeah, eventually we'll build in the calculations for certain states, and we'll ask them what state they're in, and then it'll do the math on those states as well. But right now it doesn't do that math.
Okay.
Like I said, it's still beneficial. It's just not as beneficial.
No, I get it. I mean, sure. I mean, it's going to
So
be.
what happens? So in their states, they have to meet the state set minimum wage rate before we get any credit.
Yeah. And that credit is not in the form of a check mailed back to them. It's a credit off of their tax return, correct?
Well, the way we would do it is when we file an amended return, we actually ask for the refund, and we bifurcate that, meaning we can send 30% to our trust account and 70% to the client. That's the big difference between like this and like ERC. We can do that on an amended return. We amended electronically filed return. We cannot do that on a paper filed return.
Okay. And then when you're going over this with the owner, you talk to them about how they want to proceed on that, right?
Yeah, that's going to be one of the requirements. They have to bifurcate it. Otherwise, what they're telling us is they have no plans to pay us, and we're going to have to chase them for money.
Okay. And then the weekly tips per employee, is that for because I know a lot of restaurants now, they don't get their cash tips at the end of the shift. They get it in a paycheck.
It doesn't make any difference how they get it, as long as it's reported as tipped income.
Okay. So for example, the employees that are they just taking, say, for example, are they taking a employee gets tipped? Are they taking just credit cards that are tipped? What about cash that they slip in their pocket if that's not being?
They need to report those tips. That's that's the whole impetus behind this thing. Congress designed this, and that's one of the reasons why this is not going to go away anytime soon, is Congress designed this to try to encourage employees to report their tips. So if they're not reporting it and just pocketing the cash, then it doesn't get reported. And that's the whole reason behind this, is to encourage the employees by giving an incentive to the business owner. So the business owner puts things in place that encourages the employee to report their tips. Also, this year, as part of the One Big Beautiful Bill, you're given a deduction for up to $25,000 of tipped income. Again, giving the employee an incentive to report their tips.
Okay.
So
Yeah,
that's
because 25,000 is not a lot in
it's
in
not,
tips.
it's not,
No.
but I mean, it encourages them to, so
Yeah.
you can see the motivation for Congress is to encourage the employee to report their tips. So you can also see this is not gonna, it's not like a WOTC or something that's probably going to go away at the end of this year, because WOTC's never really proven that it has any real effect. This, I mean, once upon a time, I saw some statistics. The average reported, it was much lower. Since this program's been around, the reported tips has gone up considerably.
Okay, and then can we take that annual savings off the calculator you have on the screen right now, the 59,670? As a rep, myself, I bring this client in. How are we getting paid on that 59,000?
I'll show you that in a second here.
All righty, that's exciting because that's coming up next. Okay,
All right, so are we assuming that this is just 1 year?
Yep.
Okay.
That's for 1 year. Go over to our calculator that we have, and then I think you're next on deck, right, Uncle Dan?
I can save mine till later. I want to see the money again.
All right. What is it? What did they say in Jerry Maguire, Uncle Dan? What was it?
Show me the money.
Show me the money, baby. Show me the money.
All right. So Uncle Dan, we're gonna let Uncle Dan go over this. Okay. So we just multiplied that number that was on by 4. Okay. So go back up to the top. Stephan, all we can see is the bottom. Let's see. Okay. So there we go. Right.
All right,
So,
so we got 238,680, which is that number times 4, assuming all years are about the same. I'm assuming that we're not financing this, and I'll switch it here in a second, just to show you in case the client says, "Hey, I absolutely need my money right now." We're going to have to negotiate something probably with some type of a hedge fund, where they would fund their refund faster, and then get paid back later. So we're going to have to wait till but we're assuming that if we make an arrangement like that, you're going to get an override on the spread. So I'll come back to that in a second. So in that scenario, we're asking the client to pay 30%, 71,604. We do have some costs, so we got to add some number of returns. So that's 4 returns. So we've got to add some cost for amending the returns. And so that would mean that total recovery for the rep is, without any additional financing, is 44,000. Total recovery is 44,000. That's possible to be recovered. So 33,000 is to the primary referring agent. Level 1 would be 4,452. Level 2, same thing. Level 3, 2,226. So total comes out to the paid out to the field is 44,523.
Okay, so Larry, you came in with Uncle Dan, correct? I think are you with Uncle Dan?
Yes.
Did he bring
Yes.
you? Okay. So very good. Okay, so in this situation, right? Let's go over the numbers. Okay. Uncle Dan, how much would Larry make in this situation? I'm quizzing you again.
If he was the originator to the restaurant, he would make $33,392.
Okay, that's right. And how much would you make?
$4,452.
Wonderful. That's right. Now let's say we had another level of people in here. Somebody brought him in who brought him in. Okay, go right down the line. Can you guys and gals see this? Okay. It's pretty cool. There's a little bit for a lot of people. 4452, 4452. And then the final one.
I like it, Stan.
2226. Yeah. We like it. Okay. Very good.
That's about a 14% a commission. Could you use that number approximately for most everything?
I think that we said that before. That's pretty close, Joe. You're always good with coming up with those numbers. I think that's a very, very close estimate. Okay. Very, very close.
Stefan, is that all right?
So
14%?
you're saying on the overall recovery?
Okay, so the totals, the client got $238,680, and the agent got 33,392. That's four.
Yeah, that's probably pretty consistent. Because none of the numbers change.
Yep. I think you got a good, probably a good number there,
so
Joe.
the things that would change are how many tax returns are we doing? But again, if you're going to have the numbers would still be consistent because if it's just 1 year, we're only going to do 1 year return. Those numbers would, of course, it'd be 1/4 of it, but the percentage is going to stay the same.
Okay,
So
Uncle Dan.
I do now have in the financing, so a little bit of, a little override on the financing.
Nice. So, Uncle Dan, you want to ask your question and then figure out who's next? You can help me do this thing.
This is about the fourth time I've seen this, so I'm just really trying to get a real handle on a grasp on this, because I don't want to, I do R&D tax credits, and many times you think you got a good client, and you go ahead and you set up the meeting, then they go over their taxes, and they didn't, they zero everything out, so there's no refund. There's nothing, like say a company is paying $100,000 in taxes. Well, what I'm talking about is a company, they basically wrote off everything and they're paying zero in taxes.
Yep.
In R&D, there's nothing to recover there, so there is you don't have anything. How does that works the same way with this? And then
it does work the same way, and R&D is the same thing. So you can carry forward an R&D credit, but there's nothing really to go after in that 1 year. So let me show you something here that I point out, and we tell the client this. So this is gonna...
One thing, and the second part of my question is it the money they're paying taxes off of their personal return?
Yes.
Or it's after, it's not what's on the business is paying the taxes. It's off.
That's correct.
I never knew that. So
unless it's a C Corp. So a C Corp pays its own taxes. It's like a person.
Okay.
But if it's an S Corp partnership, the income flows to the personal return. The credit is on the personal return. The credit flows through a C Corp and a partnership and an S Corp flows to the personal return. In a C Corp, everything is handled on the C Corp return. So it's like a person. But let me direct your question. So here's what I talk about. Okay, if they're getting a full refund, meaning they can absorb the entire refund and get money back from the IRS, then we're saying there's no money up front, and you're going to be paying us as part of the return. So we're going to get paid when you get paid. Now, in a situation where there's a partial refund and the rest gets carried forward, we're going to be asking them for some money. And if they're not willing to do that, we're not interested in doing the work. But here's, I think, is what your situation you're talking about. It's a full carry forward. In other words, there's no money immediately. So we're asking them, if they want to move forward, then we're asking them we're going to send them an invoice. We're expecting to get paid. Now, we're going to seek out some financing for these clients. So if they seek out financing, and more probably would in that situation, say, hey, I'm going to have a credit and I'm going to get this money next year. Can I finance this and get paid now so I can pay these people? So, because I don't have the money right now. So we're telling them up front as part of their contract, there's 3 different scenarios. One, there's enough money in the refund to cover everything. No money out of pocket. It's a partial, some money's going to have to come out of your pocket, or there's no money to be had and all of it has to come out of your pocket. But we do have financing available for you. That answer your question, Uncle Dan?
Yes, sir. Thank you.
Okay. So we're telling them up front, here, and we'll tell them this. They're going to know up front. None of this is going to be any big surprise to them. So we're looking at their tax return. So a couple things we're doing differently. One, we're getting at 8821. So one, we know the credit, whether they already got the credit, that's not going to blow up in our face. We want their tax returns. And we're going to contact the IRS to make sure you don't have some kind of big outstanding liability that's going to eat up your refund. We're going to want to know that up front. So we're not going to do a bunch of work and only find out later that nobody's getting paid because the IRS is going to take all that money. We'll know that in advance or we're not moving forward.
Excellent. Very good. Well, it's a little hard for me to see who was next, so forgive me if I skip over anybody. John Medwin, I know you got your hand up. Why don't you unmute and say hi to everybody and ask Stephan what's on your mind?
Hey, everybody. Just a quick question. Is there going to be like a back office where we can check on clients we've got being worked on or that's in the system?
Yep. Yeah, there will be a back office so we can keep you updated. And I'm kind of we use Canopy as a CRM, and sometimes we did this even with ERC when the client starts bogging down and just not getting us the information. And with their permission, we have the ability to add you on to our Canopy to that particular client. So if you want to help the client, you can help the client because now you can see what they see. Again, with their permission.
Okay. Love that handout.
We did
Great
that
job.
with ERC when we couldn't get the information from the client. We got the reps involved and said, hey, this is what we need from the client and we're not getting it. So we need your help.
Okay. Thanks so much.
Okay.
Very good. In my little chat system, I don't know, whatever, for looking who has their hand up is kind of going crazy. So I believe I saw Tom Pratt had a question. Tom, go ahead. What you got?
Yeah. So in understanding this, and I went to the Internal Revenue website to just see what this is a bit. And it seems as though no one actually gets money returned in hand. It's a tax credit for things to reduce things they once overpaid for, and they get that credited back to them. So how would we get paid in that respect, even if it's bifurcated? That they agree to give us 30% of it. If there's 30% of no transaction taking place back and forth, how do we get paid? And am I incorrect in my understanding of this? Because
a little bit. You got to understand that whether they have a liability. So all right. Let's say we've got an S corporation. We got a restaurant. They've got a credit, and let's say they've got a credit of $20,000 in that 1 year. Through the S corp return, through the K1, let's say there's just one owner. So that one owner we have to deal with. That credit comes through to their personal return as a credit against any liability. When I say liability, taxes owed or paid. Okay. So now let's say my client paid $30,000. They would get a refund of the $20,000 credit on that personal return. And in that personal return, we can file a form that says, IRS, when you send that refund, send 30% of that to this financial organization and send 70% to this client. We can do that.
okay, that makes
sense. It's a credit that they can take on their personal return.
Gotcha. Okay.
It's different. It's different than like R&D is against a liability. It doesn't flow through like this.
So ultimately, if money is owed to them, they will get a refund check from the Internal Revenue, and we'll get 30%.
Correct.
Okay, that makes sense. One more question, please.
Yes.
On your calculator, you use people that are working 40 hours a week, but many restaurants, people are working part-time and they work 20 hours a week. And so how does that get calculated?
Here, let me show you how that works. And you're going to notice that, okay. All right. So this only makes a difference if this is less than $5.15 an hour, right? Because if it's less than $5.15 an hour, now I've got to give back some of the credit that's less than, let's say it's $3.15 an hour. That's what they're getting paid. I've got to give $2 an hour back as part of the credit. So I need to know how many hours they're working. So you notice it's already at 5:15, and watch, I'm going to change this to 20 hours and you notice the number never changed. because I don't care. They're already making $5.15 an hour. I don't need to know how many hours they work. They're making $5.15 an hour. As long as they're making the minimum wage rate based on 2007, the number of hours they work doesn't make any difference.
Okay,
All
so
we care at that point is how much did they get paid in tips per week, and how many employees do we have? Because you can see, like I said, I can make this 10, I can make it 5. It doesn't change the number at all because they're already making $5.15 an hour.
okay, so if I'm the owner calculating this, going on my own, I have
Yeah.
100 employees, and 25 of them are 40 hours a week, 25 are 20 hours a week, 25, they're all different.
Yeah,
See if
then just try to just do an averaging. How many hours, on average, how many hours they work a week? On average, they work 20 hours a week. And they all get paid $5.15 an hour. So I would have eligible back to me $9,945. I'm sorry, $99,450.
I see. Okay.
Based on 100 employees, all making $5.15 an hour, all working at least 20 hours a week, and all getting $250 per week in tips. Once you get over the 5.15, that number of hours a week becomes irrelevant. Because I only need that number to determine how much I have to give back per hour because they're below the 5.15.
Okay. Gotcha.
Okie dokie. Tom, did that answer your question?
Mostly, I think it's my lack of clarity, but yes, it was a good answer.
No? Okay. Very good. And remember, we do this every week. If you got a question, you can email it over to me. We'll get Stephan to answer it. So wonderful. Okay. It looks like we've got Roseanne. You got your question, your hand up. Please unmute and ask your question.
Hi, everyone. Thank you. Is there a minimum amount of employees?
You want to stick to about more than 10. And here's actually, I think I did the math the other day. Okay, so let's say it's going to cost about $2,000 per year to amend this return. That means the only money that comes back is $983.50. So that's three. I can't put in like 3.25 to get the exact number, or 2.75, but I would stick to like 10 employees or better.
Okay.
So an average restaurant size.
And just to be clear, I looked at that example. Where they're paying 30% fee, and then off of the 30%, any of the fees that come to you for amending it is coming off the top before we get our split. Do I have that correct?
That is correct, yes, because we've got to pay out to get those amended returns. And we're making an assumption most business owners are running it through an entity. So we've got to amend both an entity return and one or more personal returns to get this credit.
Okay. I thought it was an additional fee prior to this. So that's, it comes
we're
off the
not
top.
charging that to the client. That's coming out of because clients are not going to go for that.
Right,
They
exactly.
want to know that it's just, what do I get to keep? That's all
Correct.
I care about.
Yeah, they don't care how ours gets split up, but it's
Yeah.
just
Yeah.
I just wanted to be sure that your fee
Yeah.
for processing everything was coming out of the
It is.
30%.
It's an expense of before it gets split out.
I get it. Thank you.
You're welcome.
Very good. Sorry, I was on mute there myself. Looks like Larry, I think you're next. Go ahead. Larry Nordlinger, go ahead.
Hello. I wanted to ask you. It looks like you're kind of graduating this one a little bit over R&D tax credit as far as, well, let me just ask it this way. If I walk into a winery and I'm usually asking for the R&D interest, would it be safe to say that this would be a better way to start the conversation than
If there are certain
be-
industries, it's more, yeah. See, this is the qualifications for this is just certain type of industries, okay? And it's a much broader than R&D is. R&D, there's definitely qualifiers. They've got to qualify under the 4-part test. So you're going to find less people are going to qualify. You're going to find that more business owners are going to qualify under this. There's no
Awesome.
requirements for certain restrictions. They don't have to pass any real test. The question is, did they have the employees, were their employees tipped? And were those was that tipped income reported on their tax returns? Tax returns, I mean 941s. If they say yes to all those things, they qualify. Then it's a question of
Gotcha.
how much. I mean, obviously you want to shoot for 10 employees or better, just from a marketing efficiency standpoint. But you're
And what
probably
would you
want to talk
consider a median?
median number of employees.
Yes, sir.
I would say, I mean, we've got business owners that have multiple restaurants. So I think we just did one in Colorado, 6 restaurants, 60 some. I think she had like over 60 employees. So
Nice.
that was $185,000.
Awesome. Well,
Yep.
okay, well, thank you very much.
And we had another one that we did. Stephan, go back to the calculator a minute.
Yep.
You know the one I'm talking about, right?
Oh, I know the one you're talking about. You're
Yeah,
going to go for the
let's
big
let's kind of
numbers.
Let's get everybody salivating, okay? Because I know
Yeah,
Michael
and so you
Brewer.
notice here again, like I said before, I can change this to five number of hours per week. It doesn't make any difference. I've exceeded the 515. So I'm going to put this back to 40. It doesn't change the number at all. So this is 600. This is somebody that we talked to a couple of 2 or 3 webinars ago. She said she knew somebody, her son, if I remember right,
Yep.
that has, restaurants, multiple restaurants with 600 total employees. There we go. That's 596,700 per year.
Yep. And what would that come out to if we multiplied it by
Ooh.
4? Let's go back to the income calculator, everybody. I hope you're all thinking, saying, wow, that's pretty crazy. And it
All right,
happens.
I'm gonna plug it in. I'm gonna plug it in. Oh, this is it. This is the one.
Yep, that's our thing. But now put in your new number.
This needs one more zero. So the primary writing agent is without any financing is making 371, 721.
So Larry, if you brought that deal in, how much are you making? See the number?
Yeah, I see it. Rolling my head.
371,721. Okay. That
Not
is
bad.
pretty
Level
cool.
1 is almost 50. Level 2 is almost 50. Level 3, for doing nothing, but building a team, almost 25.
Stan, Stan, I think if you look at this, like if you take this as a as a number for just for the year, if we shot for 600, enough restaurants with 600 employees,
absolutely, that's right, Uncle Dan.
That's almost $400,000. I mean, that's pretty good. So, yes.
And how much?
The odds are in your favor because 80 to 90% of them are going to say, FICA tips tax credit. I've never even heard of that.
Yep. Absolutely, for sure. But Uncle Dan has a good point with, let's just kind of think about it. Let's say that we did 600, in a year, right? I don't know, or 6 months or whatever. Uncle Dan's got a good point. How much is that, Uncle Dan? Say that again. How much?
That's 371,000, and that's more. Realistically, that's more than most people on here are making. Could be some people making more, but it's a great. I mean, I see this as something that's attainable because you may have a restaurant that, like you said, one guy may own 4 or 5 restaurants, and that could be 120, 130, and if you get 3 or 4 of those, and his buddies all own the same amount of restaurants, generally. Yeah. So you get your foot in the door with one, I guarantee you business owners they like to brag and they like to talk. So
sure.
And to me, this is just more realistic. I like to keep the numbers low. So anyway.
And it's our job just to find them and then we pass them off to Stephan.
Yep.
That's it.
That's your job. So then our people will go through and gather the payroll tax reports and all the things we need, get the documents signed, get the contract signed, get the 8821. Because what we don't want to find out is, we're going to get them $200,000 back, but they owe the IRS 250. Nobody's getting paid. So we're going to discover that up front. We're not moving forward with clients that owe money.
Makes sense.
Okie dokie. We got lots of questions. So,
and lots of questions in the chat too, Stan, for people.
okay. Uncle Dan, I'm going to ask you to read the chat. I'm trying to read all of these things. Okay, I'm going to do somebody with a hand up, and you can ask the question. You can do the questions in the chat because you're my buddy. Larry, did you have another question? I know your hand is still up, or maybe you forgot to put it down.
I do have one more
I'm good.
question.
Yeah.
Shoot.
On the approaching these owners. Obviously, we asked them, "Are you familiar with the FICA tipped tax credits?" And they say, "No, I'm not." So what do we say after that? So I'm just trying. Do we have a script or something? And then they say, "Oh, well, how would you like to learn more about it?" And they say, "Sure." And then is there a form that we fill out or just set them up an appointment with Stephan?
Yeah, so what we're going to
What's
do
the
is
process?
so everything is going to come to, so we're going to have them coming to our landing page. Our landing page is going to take them out to Calendly. Initially, I'll take the appointments. Eventually, we'll set them up as a round robin. So we'll have more than one person taking those appointments. But we're just going through and we're asking some basic questions to ferret out what the possibilities are. But from your standpoint, you're making a referral. So we're going to make a determination whether this makes sense. I'm going to ask them questions like, hey, do you owe the IRS any money? No, I don't owe any IRS any money. How many employees do you have? I have 60 employees pretty much every year. Yeah. And so I can do the math in my head or on this calculator and kind of come up with what that likely is and say, yeah, this is probably going to make a lot of sense for you.
I have something someone asked in the chat regarding the calculator, because we've got probably several reps here that are in California, but the same thing applies because I'm in Nevada, I'm in Las Vegas.
Yeah.
I think we had talked about it previously, Stephan, and
yeah,
we had said something like, can we expect maybe 20% less? And you said probably, but
yeah, I'm going to real shortly, I'm going to have a calculator built out that has that in it.
Okay.
And then I will eventually on the landing page ask them what state.
Okay.
And then we'll know the minimum wage rates and we'll be able to do more accurate math for even those clients. But yeah, there's going to be less. It's going to still be beneficial, but it's going to be less for those states. So you're going to, especially in those states, you're going to want to target higher number of employees because you're taking a hit on the wage rate.
Right.
So you're going to want to shoot for restaurants that have multiple locations, higher number of employee count. So you're not getting burned on that wage rate.
Okay, I'm going to move on to Zoom user. I don't know who you are, but you're welcome to unmute. If you'd like to ask your question, go ahead.
I'm assuming that's me, maybe not, but
yeah, I think it is because I can see the little thing lit up. So yes.
Oh, okay.
Go right ahead, Zoom user. Do you have a name?
Yeah, Michael Donaldson.
Hey, Michael, nice to meet you. Very good.
You as well.
Go ahead, shoot. Ask your question. You got the Taxman.
So I was wondering about how are we going to keep from calling over each other? Do we have territories, or how does that work?
No territories, but we are going to do some looking through databases to making sure. But I mean, we're going to have to figure out some way that to identify a individual.
Yeah.
So because if you've got a common name, that's going to get a little tougher.
Yeah,
we
right.
don't have territories really that are set up on this in this system. It was kind of like when we did ERC. For those of you that didn't do it, it was just a matter of personal relationships are always going to be the ones that work the best.
Mm-hmm.
Okay, if you know somebody who knows somebody, and you mention their name, it works really well. We feel that there's enough restaurants and a business to go around for everybody, so we're not really worried about that.
Mm-hmm.
If we run into a situation where two people contacted the same restaurant and the same owner at the same time, we'll figure it out. Maybe we'll have them split the deal. I don't know.
Yeah, if it's a client we're already working, we'll know. As I'm talking to them, I can go on our canopy. And
exactly. And so
I'm going
Do
to have the
not
name of,
worry about
I'm going to have the name of the business, and the likelihood is I've already talked to that person. I'm going to remember that conversation.
Yep. So no worries on that end. Okay.
Yeah, that's encouraging because I'm gonna try to dig up some of my ERC people. I did a lot of restaurants,
There you
There you
go.
go.
Me too.
There you
Yep.
go.
and so
ERCs are good candidates for both private insurance and
mhm.
for FICA tips.
Yeah, as soon as they hear my name, they're gonna be like, "Oh yeah, I want to talk to that guy."
Yeah, you're the one. Exactly. You've already gotten your foot in the door. You're the one
Exactly.
that got them that money back last time. This is just
Mhm.
another iteration. And
What else
actually,
you got?
this one's not going to be as big a hassle as the last one was, and they're not going to have to wait as long.
Well, yeah, I had to gather up all the documents myself on that one. I could have been, selling more people,
Right.
but I
Yep.
did about over $18 million in ERC. So
Wow.
Yeah.
I
So
was, I was,
the
yeah, I was,
process of things we have to gather are somewhat similar for ERC because we did ERC as well.
yeah, it's W-2, so that's the
Yeah.
same.
Yeah. So we need the payroll reports.
Right.
And we need to know how
Payroll
much
journals.
each employee gets paid per hour. There's certain things we have to file because we have to qualify the employees one by one. And so we have to basically do the math across all this. So essentially our calculator does this right here on an
Mhm.
individual basis.
Awesome. Well, I'm excited. This sounds
And what the calculator
amazing.
does is it produces a report that we use to amend the returns.
Hmm. Okay. Great news.
Yep. So it's very exciting, especially if you've done ERC. You've already got kind of that warm database, okay,
Yeah,
that you
those,
can
those
that you can
people.
go back to, and as far as recruiting, and as far as recruiting a team, absolutely. This is the easiest program to administer. ERC was a little tricky. You had to kind of know what to say and answers and so forth. This one, my gosh, remember what I say, everybody. Everybody knows somebody that knows somebody that knows somebody that knows somebody. Okay? And there's money in it for all of us.
And just like ERC, don't be discouraged by the CPA saying, yeah, that's not real.
Yep.
Because
we're going to have that happen because
they missed it. So that's why up here on the landing page, we're offering them a quiet second opinion.
Yeah.
You don't even have to get your CPA involved. Just get us the information. We'll tell you, and then you can decide if they missed it or not.
Yeah, and your chances are the CPA was the same guy that never got you your ERC credits.
Yeah, and you know what's really sad?
Probably the same one that was saying, no, that's not real. Don't get involved in
and
that.
what's really sad, is that there's millions of people that missed out on ERC because their accountant blew it. Okay, and there you go. Good point. Probably is. Listen, I got to kind of move on. We're running out of time. We still have a lot of questions. Maddie, can you please unmute and ask your question? Then we're going to go to Dave and then to Scotty.
Yes, thank you so much.
Yep. Go right ahead.
I'm confused about the commission percentage for the primary referral. I understand that I understood that the company charges 30%. That's the fee that the client is going to pay for the service.
Correct.
Correct. Now, my commission comes, I'm assuming, from that 30%, correct?
We pay 70% out to the field.
70%. And is that 70% distributed among the
It is.
the other
70,
lines?
yeah,
Okay.
75% to the primary writing and then 10, 10, 5.
Okay. 75, 10, 10, 5.
Correct.
That's my question. Thank you so much.
You're welcome.
That was an easy one. Okay, Dave, you're next, and then Scotty Medeiros. Unless you're maybe have your hand up from before, I'm not really sure. But we're just kind of running out of time. So, Dave, I'm going to come back to you. Scotty Medeiros, you had your hand up. Go for it. I have problems finding my unmute button too, so it's okay if we didn't get to it. That's okay. You can come back on in a second. I just want to make sure that we're getting everybody's questions answered. Okay. There's no stupid question. Okay, when we're doing this stuff. None whatsoever. Okay, so I think we've kind of gone over everything fairly well. Marketing materials, I think Stephan already showed that. Replicated sites, we're finishing those up actually right now.
Stan, I know.
Very
I had
good. Go ahead,
I,
Uncle Dan.
I signed on several people, and so is Brian. And you guys have updated the agent contract you told me today. How do I address that? So it seems like they got to redo those agent contract.
Yeah.
What are you guys going to do? What's the procedure?
Stan, I'll let you answer that.
We will resend them out. Probably Uncle Dan. They're probably going to go out to you and to Brian because you guys signed up the most on there. We added a couple of things, so it shouldn't be too killer. Okay, I don't think it's going to be too difficult when you're sending these in on these updated contracts. One of them had the W-9. That's going to remain the same. Your check and your W-9 is going to be the same. It's mainly going to be the signature pages, right, Stephan?
Yeah, I mean, we try to clarify things a little bit. Some of those contracts that came in were the earlier versions, so that as soon as I get those approved, then those will go out.
Okay.
Excellent. So we're going to take care of that, and I really like this flyer that you have right now. So this is basically, I think what we're going to do is set up a Dropbox for our agents.
Yeah,
so that you can pull out what you want. Okay.
Yeah,
These
so we'll have a Dropbox, and it's going to be specific to you. So in other words, so that you'll have these 3 flyers, and the only real difference between these flyers is this picture right here is different. Everything else is the same. But this QR code right here is going to your replicated landing page. So will this right here. This will go to your replicated landing page. So if they click this or they scan in the QR code, it's going to your replicated landing page.
So when can we expect this to have the landing pages and be able to distribute this to all the restaurants over the holidays? Will it?
I can't.
Are you anticipating?
Right now, I'd say I'm going to say before the weekend's out, but I'll try to get it out even before then.
Okay. Awesome.
This is before. I'm sorry, my tablet was unresponsive, so I couldn't get to my unmute. But I heard both responses as to the lower benefits for California. My question, though, was what do we say to our clients about it?
As far as how much will they get back?
Correct.
I mean, you can have them run the calculator on on the landing page and just have them understand that it's going to be less than that. It still will be beneficial to them, but it's not going to show that the amount that calculator is not going to calculate it accurately. It doesn't take into consideration the higher.
To appease their curiosity.
Yeah, by the time we have we'll know the actual numbers. Then I'll try to build a calculator that makes it easier for me to calculate how much it would be. In other words, a calculator that's based on that, and then we're going to make the changes to the existing calculator on the landing page, so that I'm trying to make sure that all these things come together. So once we build one replicated page, we don't have to go out and change 100 of them. We change one. So I'm trying to get a video in here. I'm trying to get the calculator updated for those states, so that everything, when we build the replicated landing page, we build it one time.
If I can make a comment on the positive side, we're dealing directly with your tax company, which is, there are a couple other companies out there that are coming, trying to do the same thing that we're doing. For those of you that are new, the big difference is they generally have a marketing company doing it. Then they get to the Stephan, which means that the commissions after they get their share are going to be a lot less. So we're just in a really good position because we're basically going directly to the source, and we don't have to worry about the marketing program with all the bells and whistles. And first to the market, we have an opportunity here to really go as fast as we can. So I'm just saying, I know I'm hot on this thing to build a huge team, but also I'm talking to
Can I ask a
restaurant.
question? I'm
Go ahead.
sorry, Uncle Dan. Can I
No
ask
problem.
a question? So I'm not clear on with it, when they're looking at the FICA, are they looking at the FICA for the business, or they understand? Are they looking at the FICA as the individual of the owner or the owners of the business? Can you explain that?
Yeah, so let's say we start with an S corp return. So the taxes that are paid are overpaid by the S corp return, right? But the S corp return is a flow through entity, so the credit flows out to the owners. Same in a partnership. That would be different in a C corp. A C corp is like its own person, so that credit would stay on the C corp. But so it ends up on the personal return of the owner, and the credit is taken care of on the personal return. So it starts on the S corp return or the partnership return and ends up flowing out just like the income does on a K1 and lands on the personal return.
Okay. Okay.
So, Uncle Dan, have you come up with like a phone pitch or anything that we can get started with once we hit the road running? I'm just so excited about this.
I've just been like, look, I just asked the question, have you heard of this? A couple restaurant owners I've been talking about, they didn't have a clue. And I said, well, you know, there's a credit specifically for restaurant owners that you're probably not receiving because your CPA probably doesn't know about it. It's 2,400 restaurant tax credits in the code. So I said, we're working on a calculator. I will get back to you. Let's make an appointment. So I'm meeting with a couple of restaurant owners next week. Tell them I'll be coming around Tuesday. So I wasn't trying to, because I wanted to get as many facts as possible. That's why I'm on these things. It's going to take us a few times. So you guys keep coming back to these and learning because I didn't understand the pass through. So I'd rather just give them a little bit just to pique their interest. And again, I'm not the sales guy trying to close them on some deal real quick. More consultative selling. So
yeah, I'm gonna screw up on a couple of small restaurants and then hone my skills before I hit the ones that's got 13 and 15 and 20 restaurants. So
that's a good idea.
Yeah, from a marketing efficiency standpoint, try to stick to like 10 or more employees, just so you're not wasting your time or everybody's time.
Yeah. All right. Awesome. Thank you.
Okay, I think that's pretty much it for questions. Scotty, I see you still had your hand up. I don't know if you couldn't find your unmute or if you just put it up by mistake. Yep, go right ahead.
Sorry, buddy. Yeah,
so there we go. Yep.
Yeah, quick question, because I missed the first 9 minutes. I was driving. So, all right, here's the quick question. So, and I don't know if somebody already asked it or whatever. Let's say you go to a restaurant, because John and I were talking yesterday. My daughter's a general manager of a restaurant, so her and I are going to talk with John. But the question is, how do they know whether they're paying taxes or not? So, like, I think I heard somebody ask the question, but do they go, hey, well, let me pick up the phone and call my CPA, or do they know or not know? Is the question. And then, where do you go from there to find out, are they paying the FICA taxes or not?
So here's how you know. So they're not supposed to pay taxes on those tips, correct? So how that credit is determined is on a form 8846. So let's say if you were to ask them, how do you file? Well, I mean, how's your business structured? We're an S corp. Okay. Let's go to your S corp return and let's take a look and see if we can find a form 8846. If we don't find one, you didn't take advantage of it.
Okay, perfect. You are the man.
Yeah, because the likelihood is the payroll service took care of this for them is highly remote. I don't know of one right now that's doing it, period. I've tried to encourage them to do it and they don't want the liability.
Okay. Thanks, guys. Great job.
Oh, righty. Excellent job, Stephan. Thank you, everybody, for coming on. The nice thing is, Andrew, my man, my business partner, is recording this presentation. So in a few minutes, we're going to stop the recording, and I will send this recording out to everybody that was on my email list. If you got it from somebody else, I'll encourage them to get it out to you. And I think we're going to call it a day. One last, going once, going twice, going 3 times. No more questions. Andrew, you are the man. can you stop the recording and please get it out to me? Okay. Very good. You can stop the recording.